You plug a little device into your car, you download an app, you drive normally for 6 months, and at the end, the insurance company looks at your braking, your speed, your acceleration, even what time of day you drive. If you drive safely, you save money. But here's the question that keeps millions of drivers up at night. What happens if I drive poorly? Will my rate go up? Will they punish me for one hard break? What if I have to drive late at night for work? The answer is more complicated than a simple yes or no, and it depends entirely on which company you choose. One major insurer is known to raise rates for poor driving. Others will not raise your rates at all. They simply reduce your discount. Make the wrong choice, and that little device could cost you hundreds of dollars. By the end of this video, you will know exactly which usage-based insurance programs can raise your rates and which ones cannot. You will learn the specific driving habits that trigger penalties, the secret enrollment discount you get just for signing up, and the one program that consumers should think twice about before plugging it in. I will break down Progressive, Allstate, State Farm, Nationwide, and the major Canadian and UK programs, rating each one on risk versus reward. You will walk away with a clear checklist to decide if telematics is right for you and which company to choose if you decide to take the plunge. Let me start with the most important fact that most people never hear. Usage-based insurance, or telematics, is not a loyalty program or a reward for existing customers. It is a data collection tool that gives insurance companies a far more accurate picture of how you actually drive. Instead of guessing your risk based on your age, credit score, or zip code, they know if you brake hard, speed, accelerate aggressively, drive late at night, or use your phone behind the wheel. That data is powerful. And with that power comes the ability to both reward safe drivers and, in some cases, charge risky drivers more. The key is to understand the rules of the game before you play. Now let me break this down into 3 segments. First, I will give you the bottom line on the major US programs, which ones raise rates and which ones do not. Second, I will walk you through the specific driving habits that hurt your score, from hard braking to phone distraction. Third, I will cover the Canadian and UK markets and give you a step-by-step checklist to decide if telematics is right for you. Segment 1. The major US programs compared. Let me start with the one that gets the most attention and the most warnings. Progressive Snapshot. Progressive is completely transparent about the fact that about 20% of Snapshot drivers see a rate increase because of poor driving habits. That is 1 in 5 drivers. If you speed, brake hard, or accelerate aggressively, Progressive can and will raise your rates at renewal. The discount starts at 15% just for enrolling, and good drivers can save up to 45%, but the risk is real. Roughly 20% of drivers see their rates go up. One driver on Reddit reported a $200 increase at renewal, which turned out to be the removal of the Snapshot discount due to flagged driving habits. It wasn't a penalty per se, but the end result was the same: higher bill. Now let me contrast that with Allstate Drivewise. This is where things get confusing because different sources say different things. Allstate's own website says that most customers save and the safest drivers can save up to 30%. But multiple consumer sites report that Drivewise can raise rates for poor driving habits like speeding and hard braking. However, a 2026 review states flatly that Allstate guarantees Drivewise participation will not increase your rate, only potentially decrease it. What is the truth? The safe answer is that Allstate's policies vary by state, and you need to read your specific enrollment agreement. In some states, Allstate may impose a surcharge for high-risk driving. In others, they will not raise your rate, but you will not qualify for the maximum discount. The bottom line is that Drivewise carries more risk than the programs I am about to mention. Now here is the pattern interrupt that most agents will never tell you. Some major insurers have programs that are completely risk-free. They will not raise your rates no matter how poorly you drive. They simply adjust your discount upward or downward within a guaranteed range. State Farm Drive Safe and Save is one of them. State Farm guarantees that Drive Safe and Save can only lower your premium. It will not increase your rates if it detects poor driving habits. You get a discount just for signing up, usually 5% to 10%, and your final discount based on driving can go up to 30%. But if you drive poorly, you simply get a smaller discount. Your base rate does not go up because of the program. That is a massive difference from Progressive. State Farm also has one of the best initial discounts in the industry. Nationwide Smart Ride is similarly low risk. Smart Ride tracks your driving for a period and offers a discount based on your performance. Like State Farm, Smart Ride will not raise your rates for unsafe driving. Your base premium stays the same. You simply earn a smaller discount or no discount at all. Some drivers have reported Smart Ride discounts as high as 40% for extremely safe driving. For drivers who are not sure about their habits, these no-risk programs are the safest entry point. Geico Drive Easy falls somewhere in the middle. Drive Easy offers a discount for safe driving based on factors like phone distraction, smoothness of driving, and time of day. Geico states that Drive Easy can only help you save, not increase your rate. But like Allstate, policies vary by state, and some users have reported that their rate went up after using Drive Easy. The safest approach is to assume that any telematics program carries some risk unless the insurer explicitly guarantees otherwise in writing. Before I move on, let me give you a quick summary of how these programs actually work. Most use an app on your smartphone or a plug-in device that connects to your car's diagnostic port. The device or app records your speed, braking patterns, acceleration, time of day, and sometimes phone usage. After an initial learning period of 90 to 180 days, the insurer calculates your driving score and applies a discount or surcharge to your next renewal. For most programs, that discount is locked in for future renewals, though some require ongoing monitoring. Segment 2. The driving habits that hurt you the most, regardless of which program you choose, the same behaviors trigger penalties. Let me walk you through the top 4. Number 1 is hard braking. This is the most heavily weighted factor in almost every telematics program. A hard brake is defined as decelerating faster than a certain threshold, usually around 7 miles per hour per second. In plain English, it means stopping too suddenly. Every time you slam on your brakes because you were following too close or not paying attention, your score drops. The fix is simple. Increase your following distance. Leave at least 3 to 4 seconds between you and the car ahead. Anticipate stops. When you see a yellow light, ease off the gas instead of speeding up to beat it. Eliminating hard braking alone can improve your score by 20% to 30%. Number 2 is speeding. Telematics devices do not know the posted speed limit on every road. Instead, they compare your speed to the average speed of other drivers on the same road at the same time of day. If you are consistently driving faster than the flow of traffic, it flags you. The fix is to use cruise control on highways and never speed through construction zones, school zones, or residential areas where violations are weighted more heavily. Number 3 is aggressive acceleration. This is the opposite of hard braking. It means gunning it from a stoplight or merging onto a highway too aggressively. The fix is to accelerate smoothly. Pretend you have a cup of coffee on your dashboard. If you would spill it, you are accelerating too fast. Number 4 is late night driving. Most telematics programs consider driving between midnight and 4 a.m. as high risk, regardless of how safely you drive. A driver who is perfectly safe at 2:00 a.m. still gets penalized because statistics show that late-night driving is more likely to result in serious accidents. The fix is obvious. Avoid driving during those hours during your monitoring period. If you work a night shift, call your insurer and ask if there is an exemption. Some programs offer exceptions for shift workers. One more factor that is increasingly common is phone distraction. Newer apps can detect if you are touching your screen, typing, or even holding your phone while driving. Put your phone in the glove box or use a hands-free mount and never touch it while driving. Enable Do Not Disturb while driving mode. Segment 3. Canada, the UK, and the final decision. In Canada, the major telematics programs come with both rewards and risks. Intact Insurance's MyDrive program offers a 10% discount just for enrolling, with the potential to save up to 30% based on safe driving. However, some sources report that Intact can penalize poor driving with an increase of up to 25%. That is a significant risk. The program tracks speed, phone distraction, and smoothness of braking and acceleration. If you are a safe driver, the rewards are substantial. If you have poor habits, you could end up paying more. Allstate Canada's Drivewise is similar to its U.S. counterpart, offering savings of up to 30%, but with the potential for rate increases for high-risk driving. Desjardins also offers a telematics program with a similar risk profile. In Canada, the safest approach is to assume that poor driving will result in a higher premium unless the insurer explicitly guarantees otherwise. Read your enrollment agreement carefully. In the UK, telematics is often called black box insurance. These policies are most common for young and new drivers. UK. Telematics policies often impose strict rules, including nighttime curfews between 11 p.m. and 5 a.m. Breaking the curfew can result in fines or even policy cancellation. Some policies also have mileage caps. If you exceed your estimated mileage, you could be charged extra. One driver in the UK reported having their policy canceled for not driving enough after missing an email about a 28-day inactivity warning. UK telematics is generally more restrictive than US programs, but the potential savings can be significant for young drivers. The key is to read every word of the fine print before you sign. So how do you decide if usage-based insurance is right for you? Let me give you a 5-step decision checklist. Step 1. Assess your driving habits honestly. Do you brake hard often? Do you speed? Do you accelerate aggressively? Do you drive late at night? If you answer yes to any of these, consider a no-risk program like State Farm Drive, Safe and Save, or Nationwide Smart Ride, where your rates will not go up even if you drive poorly. Step 2. If you are confident in your safe driving habits, consider Progressive Snapshot, where the potential savings are higher, up to 45%, but the risk of a rate increase is real. 1 in 5 drivers sees their rates go up. Be sure you are in the 80% who save. Step 3. Check with your current insurer before you sign up for any program. Ask them directly. Does this program increase my rate if I drive poorly? And get the answer in writing. Save the email or chat transcript. Step 4. Time your enrollment carefully. Do not start a monitoring period during a high-stress time like the holidays, a move, or when you have a lot of late-night driving. Start during a quiet month when your schedule is predictable. Step 5. During the monitoring period, drive like a saint. Increase your following distance. Accelerate slowly. Brake gently. Put your phone away. Treat every trip as if you are being graded, because you are. Let me give you a real-world example. A driver in Ohio named Jennifer enrolled in Progressive Snapshot. Her initial premium was $180 per month with a 15% upfront discount, so she paid $153. During her 6-month monitoring period, she changed her habits. She left a 4-second gap. She used cruise control. She stopped driving to the grocery store after midnight. Her final Snapshot score was excellent. Progressive gave her a 25% discount locked in. Her new premium was $135 per month. She saved $45 per month, over $500 per year. And after the monitoring period ended, she relaxed her habits slightly. Her rate stayed the same because the discount was locked. Now let me give you a cautionary tale. A driver in Florida named Mike enrolled in the same program. He had a heavy foot and often braked hard. After 6 months, his Snapshot discount was removed entirely, and his premium went from $160 to $200 per month. He was in the unlucky 20%. He later switched to State Farm Drive Safe and Save, where his rates did not increase despite his driving habits, though his discount was minimal. He now pays $195 per month, still higher than his original rate, but better than $200. Let me recap the key takeaways. Number 1. Progressive Snapshot